Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hello and welcome to the Finovate podcast. We've got a fun one for you today. Joining me, we have Lark Davis, founder of Wealth Mastery. Lark, thanks so much for joining me today.
Thanks for having me, Greg. Excited to talk to you.
So we're going to be getting into what you need to know about cryptocurrencies for the next year. But before we get there, Lark, can you take a quick minute and give us some background on yourself and what Wealth Mastery is all about?
Sure. So I've been investing very heavily in the cryptocurrency space since 2017, and it's just been full on since then. Day and night, thinking about cryptos, investing in cryptos, learning about the industry, learning about the different technology, and finding different ways to invest and participate and educate, most importantly, in the space, which is, I think, my primary goal is to educate people on investing smartly and new technology and things happening, keep people up to date in the news, in the market. And so that's what we do with our Lark Davis YouTube channel, Lark Davis X account, and of course the Wealth Mastery newsletter, which is a written format newsletter we send out 3 times per week to keep people up to date and, hopefully ahead of the curve in this fast moving market.
Yeah, and certainly I'd encourage anybody to check out the variety of ways that you can learn more about Lark and see kind of more of the insights that he has to share. What we're going to talk about today is kind of a high-level overview of where we're at right now in the cryptocurrency space. And, from my perspective, I think 2024 was a kind of quieter year, at least compared to some of the pieces we've seen, the roller coaster ride we've been on. But while it hasn't gotten as much mainstream media attention, I also feel like there have been a few areas where we've seen some established players who are starting to engage with cryptocurrencies in really productive ways and sort of under the radar ways. From your perspective, what are the biggest things that you saw in 2024 that people might have missed if they weren't paying close attention?
What's interesting is that 2024 has been probably one of the fundamentally biggest, most important years ever in the entire cryptocurrency market, probably the biggest. The fundamentals of cryptocurrency technology and the cryptocurrency marketplace have literally never been better. But retail interest, the broad interest from the broad market, it's not really there right now. But let's just recap some of the really big stuff, the high-level stuff that's happened. Of course, we had ETF products launched in U.S. markets. Now, European markets have had ETF products for quite a while now. Canada has had a crypto ETF for Bitcoin and for Ethereum for years now. I think they finally launched the Solana ETF recently. Brazil's had it for a few years, but US markets have been very hesitant to introduce these products until, of course, BlackRock got in the game. You see, there have been a lot of players for a long time pushing to try to get Bitcoin ETF products, and then BlackRock decided they want one, and guess what? BlackRock got what they wanted because that's what BlackRock does. And so this has been I think the most successful, or certainly one of the top most successful ever ETF launches. We've had $25 billion of net inflows to Bitcoin ETFs since launch in January. Now, to put that in perspective, it took gold like 10 years or something to get to that kind of level. And Bitcoin did that in less than a year. So the demand has been off the charts for Bitcoin specifically. We did have an Ethereum ETF launch this year. The reception was pretty tepid, let's say, from Wall Street for Ethereum ETF products. So they've been going crazy for Bitcoin this year. So that's introduced a whole new market of people and a whole new level of social proofing for the cryptocurrency asset class. You have Larry Fink, the CEO of BlackRock, out there saying, I like Bitcoin. Bitcoin's great. It's a hedge against inflation. It's not going anywhere. It's a real asset class people can invest in now, right? You have Fidelity talking about it. You have big players from Alliance Bernstein and Franklin Templeton who are all getting on the train. And what's interesting is some of these other big firms like Franklin Templeton, they're not just stopping with Bitcoin. They're going deeper. They're going and looking at the altcoin space, and they're launching funds on chain. BlackRock launched a money fund on chain. We've seen all kinds of just money flowing in and all kinds of very big things happening. And then we've had, I think, more state level participation and in crypto than ever before. And this is what's really crazy because, again, the retail market's largely been asleep. But you had, in the last year, confirmed that Oman, Ethiopia, the UAE, and Bhutan, Russia, Qatar is rumored to be doing it, probably doing it, all mining Bitcoin. El Salvador is already on the Bitcoin mining train. So we have all these state level actors out there mining Bitcoin right now. And that's insane. And we have literal states in America. The state of Florida came out the other day and said they're going to buy more Bitcoin. They revealed they have $800 million in different crypto asset investments. This is crazy stuff. The UK pension fund came out and said they're allocating 3% of their pension fund over to Bitcoin. Like, there's big things happening this year. And this is just the tip of the iceberg of a mountain of stories that have come in over the last months here in the market. It's been a pretty wild year, 2024.
Yeah, well, I think when you kind of talk about it in those terms, you see all the activity taking place. And again, this is not about retail investing. This is about government entities and others, more really established players in the space who are looking at this and saying, okay, we want in. Now, I want to talk about stable coins in particular. I think this is one of those areas where, again, it's not necessarily super flashy, but there's some really cool stuff happening. Can you talk about what you're seeing on the stable coin side of the ecosystem?
Stable coins, in many ways, are the killer app of cryptocurrency technology. See, blockchain technology, it is essentially the value layer of the internet, if you want to think about it like that. That's why this technology is so fundamentally important. And you've had different iterations that have come out. You've had NFT technology, which saw a lot of speculation, but was essentially verifiable digital ownership of different assets. And we're going to see all kinds of novel use cases for that come out. But stable coins, they're the real killer app of crypto. We are seeing them do trillions upon trillions a year in volume. Massive, massive money going into stablecoin technology. And we're seeing now a more vibrant stablecoin ecosystem pop up. So for the longest time, stablecoins, and for anybody who doesn't know what stablecoin is, by the way, these are cryptocurrency tokens that are pegged to and backed by a fiat currency. US dollar ones, of course, are obviously the most popular. The two biggest of those are USDC, issued by Circle, backed by Coinbase, and the other is Tether. Now, both of these are basically backed by US treasuries and stuff like that. Tether is one of the most per employee profitable companies in history. I think they do something like $200 million or $250 million in profit per employee. It's wow. Crazy. They just announced they've bought 50 tons of gold and 20,000 Bitcoin or something like that. I'm not sure the exact numbers, but something like that. They're making billions of dollars a year because they've issued out, say, $100 billion in stable coins, and most of that sitting in U.S. treasuries, making them 5% a year, because you don't get the interest when you hold the stable coins. They do. So it's a great business model for them, but it's also a very valuable technology because people around the world are using stable coins, and we're seeing more and more stablecoin players come in. We just had a big announcement today that a bunch of big financial institutions are backing something called USD Global, which is a new stablecoin competitor coming into the market. So PayPal's launched a stablecoin. Lots of big institutions have. Here in Dubai, where I'm living right now, the government just launched an Emirati dirham stablecoin. So it's happening where you have euro stable coins, yen stable coins. Like, there's so much happening in the stable coin space. And basically what this does is this removes the friction of money to move. Now, if anybody's ever sent an international bank transfer, you know the pain involved, okay? You got to send it from your bank. There's all these big fees involved. There's some middle bank. They take this sort of hit and run fee. You don't even know they're there, but they take a fee anyway. You got to get it to the end participant. You've had Forex fees that have been crushing, sometimes a few percentage points. And it takes a week, if you're lucky. And sometimes it just gets held up, and it might be 3 or 4 weeks later, and you get a phone call, hey, we're holding up your payment. Why? Well, we don't really have a good reason, but we're doing it anyway. Whereas if you can take stable coins, let's say USDC as an example, and you want to pay for something, you can send USDC across a network like Solana for a fraction of a penny, and it'll be there in a second. It is game-changing financial technology, and you see why it's growing in popularity so fast. By the way, interesting statistic. 2 of the top 20 globally buyers of U.S. treasuries are USDC and USDT, the stablecoin suppliers. It's crazy.
Wow. I mean, so obviously, cross-border payments is something that people have struggled with for a really long time. That's no secret. And I think the experience that you outlined there is honestly way too common, right? It's something which I think, again, if you've worked in this space, you understand those pain points. I think one of the other aspects that, we when you think about stablecoins, there's also this huge play when you look at people who are right now excluded from traditional banking experiences, unbanked, the underbanked people around the world. Can you talk about not how stablecoin, but maybe not just stablecoins are improving the lives of people who do need access to the financial system?
Stablecoins, again, have been, I think, the increasingly popular choice for people in sort of the developing regions of the world. In the West, if you live in America or Australia or something like that, you're looking at crypto as largely a fun thing to invest in, as new novel technology. It's interesting. It's going to make us money. But when you look at the necessity of this technology, that's when it becomes really interesting. A few years ago, and we've moved on quite a bit since then, but when Bitcoin was a more popular option, it still is a very popular option, but most people have transitioned over to stable coins these days. I remember talking to a guy, Ray Youssef, and he ran a peer-to-peer Bitcoin exchange, which I think has gone out of business since then. But he was talking about how he was on the ground. He's an Egyptian guy, and he was on the ground in Africa, and he's going to like Nigeria and teaching people how to use Bitcoin. And these guys, because there was like capital controls of ridiculous extent. I think you could only send out $1,000 US a month. So you have like Nigerian businessmen who are trying to, buy and sell cars and stuff from overseas, import them to Nigeria, flip them for money, just simple business stuff. And it's almost impossible for them to do using the traditional banking rails. So these guys were all turning to Bitcoin to be able to run their businesses. And one of my writing team, by the way, he's in Nigeria and he's a great writer, but I can't pay him using the banking networks because banks don't want to send money to Nigeria. So I pay him using crypto stablecoins. And it's a very powerful technology. And we've seen huge adoption rates for cryptocurrency technologies in a lot of these developing regions, whether we talk about Nigeria or Argentina or a whole variety of other places. We see massive adoption for stablecoin technology, either as a savings mechanism for people to get out of their local fiat currencies or to get around capital controls or simply to get around remittances. A lot of remittance companies charge very high percentages. And again, the scenario I just laid out, you can send that USDC across Solana for a fraction of a penny, and there's nobody taking 5% or something like that, like some of these remittance companies might do. So it's game changing, and it's really helping people who are adopting the technology.
Yeah, and I think this disconnect you highlighted between how people in more developed countries look at it and think, oh, it's a fun gambling place. It's like the equivalent of going to bet on college football or something like that. Like you can go and you buy a ticket, you ride the roller coaster, you might make a little bit of money, you might not, but either way, you're playing the game. For people in other parts of the world, it's very different. It's much more serious, and I think this is one of those areas where people inside the United States, in particular, have this view of what cryptocurrency is, which really is getting divorced from the reality of what the useful aspects that it can do. And so this, I think, brings me to the next question, which is, a lot of our listeners come from the United States. A lot of them work at more traditional financial institutions, banks, credit unions, and things like that. What opportunities do you see for people who are part of those groups to get involved, to take advantage of some of these opportunities that are starting to show themselves around the world?
Some of the biggest banks in the world right now are offering Bitcoin custody. They're offering Bitcoin sales to customers. We have major companies, ANZ Bank, for example, ANZ Bank for all you guys in America. They're working with Chainlink on Oracle solutions and on cross-chain transfers and on stablecoin technology. We've had companies like Banco Santander issue out tokenized assets. And this is a very interesting conversation around the tokenization of assets, because go listen to Larry Fink. If you haven't listened to Larry Fink talking about Bitcoin, if you haven't listened to Larry Fink talking about tokenization, you need to take a few minutes out of your day, go find some YouTube clips and listen to what Larry Fink, the CEO of BlackRock, one of the most powerful men in the world, is saying right now. He loves Bitcoin, but what he's really bullish on is the tokenization of assets. So we're talking about tokenizing bonds, tokenizing real estate, tokenizing stocks, tokenizing commodities, everything. And why do you want to tokenize stuff? There's a massive use case here for it, and that is that you remove the clearinghouses. You are able to make settlement times dramatically better. You're able to reduce fees. The current system for all this trading of equities and real estate and all this stuff is such an opaque and onerous and costly system that when we replace that, and again, this is not me saying this is Larry Fink from BlackRock, okay? I'm paraphrasing a bit of what he's saying here. But when we remove these systems that we've had with new technology, the velocity of money and the velocity of assets increases dramatically.
Yeah, no, I think this is a good reminder that there are a lot of people, again, institutional, very powerful people who are talking about this. Can you go into a little bit more detail on tokenization? Because I think this is something which, to be honest, before I started chatting with you, I hadn't spent much time thinking about it. Can you go into this in a little more detail and talk about, who really needs to be aware of this and playing in this space?
Sure. I mean, if you are working at a financial institution right now and you don't have a Web3, which is commonly what we're calling crypto technology these days, if you don't have a Web3 plan, then you're going to get blockbustered by somebody who does have a Web3 plan, because this is where everything's going, okay? And Bitcoin is the novel technology. It started everything off, and it gets the most attention, right? But when you look at the rails of what's being built and the implications for what stable coins are going to do, and particularly the tokenization of assets are going to do, you will very soon figure out that you need to have a plan for what's coming, because pretty soon everything's going to be moving on chain. And that might sound like, oh, that's crazy, that's never going to happen. Fast forward 10 years, fast forward 15 years, in a world that's dominated by AI, how are you going to verify and prove almost anything? It's going to be on the blockchain, where we have verifiable proofs of what is and is not. And that's going to be a very, very important step in an AI world, to have all these levels of verification on chain of what is and is not. And then we start to come to what assets are interesting. So if you're working at a bank, for example, and you want to be doing home mortgages, well, you can put those mortgages on the blockchain, right? And that allows for a whole variety of different transfers of ownership, or whatever we might be seeing happen with that. Or if people want to an extent, remove some of the middlemen, which is probably what's going to happen, they're going to be able to go to smart contract platforms. They'll be able to tokenize their own property and take like a second mortgage versus it, for example, thus disrupting the long-standing business model of banks. So the smartest banks in the world right now, the smartest financial players in the world right now, they recognize that there's massive disruption coming to their entire business models, and that they will either adopt and be the front runners of this technology, or they're going to get crushed by it.
Yeah, and I think, unfortunately, we have to leave it there. This has been really fascinating. And there are a couple different areas to follow up for anybody who's curious to learn more. Obviously, as Lark said, you can go and take a look at some of Larry Fink's thoughts. They are available on YouTube. Just quick, Larry Fink blockchain Google search will get you there. You can also check out Lark himself and follow along with his streams over at Wealth Mastery. And Lark, I just want to thank you for taking time to educate our listeners on something which many of them might not be as well versed on. So appreciate you sharing your thoughts with us.
Greg, thanks so much for having me on. It's definitely a topic we go way deeper on. We spend hours talking about stable coins, but I hope this is a good overview for people and gives them a little spark to start going and do a little more deep diving and learn a bit more about this great technology.
Absolutely. Thanks again.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@Finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.